The issue of health care is one that we cannot, absolutely cannot ignore. As you well know, the intent of the Affordable Care Act was actually to expand health care coverage in this nation, where we have so many millions of year-round uninsured, and the wealthiest nation in the world. Well, as I mentioned before, this is a status that is shifting as we speak. But the fact that we have so many uninsured people has been something that has been unacceptable for too long. So it is my pleasure to welcome to the show Trudy Lieberman. And Trudy Lieberman is a reporter with the Columbia Journalism Review. They actually do something that's fascinating to me. Not only do they report on the issues, but they also examine the process of the reporting, what's going on in terms of the news coverage, and parsing it like from providing a meta-analysis of what's happening with the news. Welcome, Trudy.
Thank you. Good to be with you.
It's great having you. Thank you so much for joining me. So, Trudy, several years ago we passed the Affordable Care Act. It was heralded as a major step forward in our effort to cover the uninsured in this nation. And some of the major and very important components of this bill were the fact that it actually made certain forms of discrimination in the market illegal. So, for example, discrimination against those who have a pre-existing condition. Gender rating. Many people didn't know that healthcare plans actually charge women more higher rates than men, and so the Affordable Care Act actually eliminated and said that gender rating was actually not legal. And other forms of discrimination it actually got rid of. Yet now we're seeing that many of these plans that are and will be offered on the state health insurance exchange are actually rising in costs. Why is that, Trudy?
Well, the general reason is that healthcare costs are rising across the country, and the cost of medical care gets passed along in insurance premiums, whether or not they're going to be sold on these new state exchanges, or whether they're in Medicare, or whether they're just for the rest of people who get insurance through their employers. That's the basic problem.
But Trudy, you actually point out in the article that you recently wrote that the actual costs of medical products is actually stagnant. In your coverage, I think it was of Aetna, yet their premiums are increasing dramatically. And so they actually are arguing that it's because of the Affordable Care Act, correct?
Well, there are some costs to the Affordable Care Act that are going to contribute to some pressures on premiums. I think there's no question about it. And aside from the underlying cost of care, which is called trend in the industry, and you have to watch that because that is a basic component of healthcare inflation. The other issue is that the insurers are no longer going to be able to medically underwrite. And that's a good thing because people with pre-existing conditions will now be able to get health care in the individual insurance market where they haven't been up to this point. So that's going to mean that the insurers are going to have to insure people who are sick. And some of these people are likely to be very sick. And I think the insurance companies are kind of worried about how that's all going to play out. So for that, a restriction, which the Affordable Care Act requires, they're going to have to get a lot of people into their risk pool. The notion of pooling risk in insurance is sometimes very difficult for people to understand, but what they do is try to get as many healthy people to balance out the number of sick people who will come in. So the carriers are kind of worried that since premiums are going up for a lot of reasons, what might happen is that people are not going to sign up for coverage in these exchanges. And the industry has chosen really to talk about young people whose premiums they say are going to increase because of these restrictions. And I think that this was known while the Affordable Care Act was being debated, because I remember writing a post about it in the summer of 2009, and some actuarial firms were really worried about it. And I remember an AP story that was sent out on the wires that dealt with this very issue, but it was kind of overlooked in the race to pass something and the sense of urgency that the proponents of the ACA felt at the time. So I think that's what the insurance companies are really worried about. And the other thing that they're worried about is that now they have to make gender-neutral rates, and that means that men and women will be charged identical rates for, say, a given policy. And through the years, historically, that hasn't been the case. The insurers have charged women more on the theory, or perhaps not the theory, maybe there's some basis for this, at least they claimed there was, that women had a lot more health issues at various ages, certainly younger ages, when you think about maternity. Mm-hmm. And so what happened is that through the years, they have justified those increased premiums for women. So now that's going to be gone as well.
So, Trudy, is the bottom line that equity costs more? In order to make sure that we have an equitable system that treats everyone the same, that it actually does cost more?
It may. In a private system like the one that we have chosen to have in this country, it very well may mean that. And I think that only time is going to tell. I think we've got to see that these exchanges get started, and even that's problematic in many states, and see what people do. But I think there's a real concern about affordability, and we at the Columbia Journalism Review talked a lot about that.
So let's talk about that, because you actually did a piece that actually covered Connecticut's health insurance exchange, and ultimately the bottom line was what?
Well, right now, the people in Connecticut who are involved with the exchange board, has chosen a policy, as all the exchanges are supposed to do. They are to set a benchmark policy given a number of options that the feds have given them. And in Connecticut, they happened to pick one that they thought was going to be a good benchmark because it provided some pretty good benefits. You want policies to provide coverage and be somewhat comprehensive. But it turns out that in a matter of months, since they chose the plan, the policy is now unaffordable and isn't even being offered by the carrier. So there's a lot of clamor in Connecticut for reducing the benefit package. Now, there is an essential benefit package that all the plans have to conform to, and that's mandated by the ACA. But within that essential benefit package, there's a fair amount of leeway, and that has something to do with trade-offs and pricing and so forth. And so what's going to happen is that there's a lot of talk about reducing that package in Connecticut and probably other states as well, so that they can come up with a combination of benefits that they claim will be more affordable. And so there's a real worry in Connecticut that this trade-off between having very rich benefit package, you want a policy that's going to cover you when you get sick, may cost a lot more. And so what they're trying to do is balance the affordability with the benefit package. Okay. And I think in Connecticut, it's right now we don't know what's going to happen. It's something we're going to be following pretty closely at CJR.
Okay, so there are 2 points that I want to parse here. One is the fact that there was an individual mandate that was a part of the Affordable Care Act. And so when you have this mandate, wasn't the purpose of that to ensure that enrollment even for the healthy people so that we wouldn't have a highly sick risk pool?
That was the idea, and that's what the insurance companies want in order to support the act, which they did at various points during the time it was debated. They have to have as many people as possible in that risk pool, and therefore they had to have the mandate and the penalties to force people, require them, whatever verb you want to use, to get them to buy coverage. And what they're afraid of is that if policies cost too much, it will be cheaper for many people to take the penalty rather than pay for the policy. Now, some people will get subsidies. Those subsidies will go from people with very low incomes all the way up to people who have a family income, say of around $92,000 now. But there's some problems with this as well. The subsidies will be richer for people at the bottom. Those who have less income will get a greater subsidy, and that's probably how it should be. But people in the middle ranges, say with incomes of $50,000, $60,000, $65,000, $70,000 family income of that, may still struggle to pay the premium even with the subsidy. And I think that there is a chance that people in those income brackets may also decide that it's cheaper to take the penalty than to come up with $8,000 or $9,000, which is what they might have to add to the subsidy to get a decent policy.
Right. I actually like to ask you to stay for after the break, but I do want to ask you quickly, is there hope for the public option, knowing that many of these private plans may be unaffordable? Do you think that there's room for the public option to be reintroduced?
I think it's not totally dead. I think it's probably dead for the next year or so. But I think if experience shows that there needs to be some other alternative, I think that there will be some movement perhaps in Congress to kind of revive it. And I think that's going to depend, too, on what happens to the co-ops. I did a piece on co-ops and what was happening to them. And, of course, we can't establish any more new co-ops. The funding has been cut off for them. And that was supposed to be sort of a consolation prize for not having the public option. So I think it's worthwhile watching what's going to happen in those 24 or so co-ops that will go forward and see if they can get any traction and get any business.